Hi traders, welcome back. It's been a month since my last video. In today's video, I'll teach you my favorite entry method that I use regularly in my trading, the unicorn model. I'll explain it clearly and simply even if you're just starting your trading journey. This video will be divided into 3 clear sections. I will explain the unicorn entry model, then a step-by-step checklist for trading the unicorn model, and finally, a real examples from trades taken with my students. Make sure you watch until the end, because I have a special gift for you. Let's get started. The unicorn model consists of 2 main components, breaker blocks and fair value gaps. Let's understand each clearly. Breaker blocks. A breaker block is a simple structural pattern, bearish breaker. First, you have a swing high, followed by a swing low. Then, price moves up above the first high and quickly moves back down below the initial low. In the live market, it looks like this. You identify the bearish breaker block by marking the last bearish candle, or a series of candles, before the price moves up to take the first high. Many traders refer to this move above the high as a liquidity raid or a stop hunt. Mark from the candle wicks, not just the bodies, and extend it to the right. Bullish breaker. It's simply the opposite. You have a swing low, then a high, followed by a lower low, and finally a move higher above the initial high. Mark the last bullish candle, or series of candles, before the lower low as your breaker block. Fair value gaps. I've talked about fair value gaps frequently, but let's quickly recap. A fair value gap is a 3-candle pattern. It occurs when the wicks of the first and third candles don't overlap. Here are examples of bullish and bearish fair value gaps. The unicorn model happens when you have a strong displacement above or below the breaker block that creates a fair value gap overlapping with the breaker. The overlap can be slight, but there must be some overlap between the breaker and the fair value gap. Entry and stop loss placement. Typically, traders place a limit order at the breaker block with a stop loss at the recent high for bearish setups or the recent low for bullish setups. But I'm flexible. I always listen to what the market is telling me. I'll show you exactly how I do this with real trades shortly. Unicorn model checklist. Before entering any trade, confirm these conditions. 1. Clear higher time frame bias. You must have a clear directional bias. If you're unsure how to determine bias, I've covered this in detail in another video, linked above and in the description. 2. Besides bias, you need a clear PD array from which to base your trades. I call this the narrative. I dive deeper into narratives in my mentorship program. 3. Timing. Your setup must align with optimal timing. For Forex, I look for unicorn entries between 2 a.m. and 10 a.m. EST. For indices, focus on the New York AM session from 8 a.m. to 12 p.m. EST. 4. The unicorn model. Confirm you have both elements clearly visible, a breaker block and an overlapping fair value gap. Once all these points are checked, you have an ideal unicorn setup ready for trading. Trade examples. Before jumping into trade examples, I want to quickly mention my mentorship program. Here, I teach you the full strategy I use to consistently profit, and I trade with my students so they can see exactly how I apply these methods in real time. If you're interested, the link to join is in the description below. Let's look at 3 real trade examples now. Remember, stick around till the end. I have a special gift waiting for you. Let's dive into the examples. Example 1. 1-minute unicorn entry, June 6th, 2025. Let's break this down. On the 4-hour time frame, we saw a liquidity sweep where the market failed to break above the swing high, resulting in a bearish respect candle, a candle with a long upper wick. This was our first signal for a potential downward move, targeting the opposite swing low. Additionally, approaching the London session, a bearish fair value gap appeared, confirming our bearish bias. On the 1-hour time frame, we identified a clear bearish fair value gap as our PD array for price to retrace into before continuing downward. On the 1-minute time frame, as price retraced into our identified 1-hour fair value gap, we confirmed it was within the optimal trading time. Next, we observed the unicorn model clearly, a high followed by another higher high, a stop raid, then a sharp move down, creating a bearish fair value gap. The breaker was marked from the last bearish candles before the stop raid, overlapping with the bearish fair value gap. We waited for confirmation with a bearish candle formation to ensure the move wasn't a sweep. Entry placed here, stop loss above the high, targeting a fixed 2R. The trade executed perfectly with minimal drawdown. Execution and Discord signal shown here. Example 2, 15-minute unicorn entry, June 17th, 2025. Here's the breakdown. Bias, daily time frame. Price had reached a key swing high and was likely to undergo a deeper retracement. This scenario provided our bearish bias clearly. We identified a bearish 4-hour fair value gap as our primary PD array. Although a bullish fair value gap was present, our advanced analysis indicated the bearish gap would dominate. Unicorn model on the 15-minute time frame. We observed the structure clearly. A high, followed by a low, then a higher high. A sharp reversal downward created a bearish fair value gap overlapping perfectly with our identified breaker. Entry placed at the breaker. Stop loss above the recent high, targeting 2R. The trade offered a straightforward 2R reward quickly, aligning perfectly with our optimal timing. Execution and Discord signals shown here. Example 3, 5-minute unicorn entry, July 1st, 2025. Here's how this played out. Bias on the 4-hour time frame. Price was clearly bullish, having closed above a swing high and printed bullish fair value gaps. It was evidently bullish to any observer. We found our bullish fair value gap as our PD array on the same time frame, marking this clearly for our anticipated retracement and continuation upwards. As price retraced into our 4-hour bullish fair value gap, the unicorn model formed clearly. A low followed by a high, then a lower low, and then a decisive move upward. A bullish fair value gap overlapping partially with our breaker was our entry confirmation. We entered at the breaker. Stop loss placed below the recent swing low, targeting a fixed 2R. The market moved in our favor smoothly, achieving our profit target. Execution and Discord signals shown here. Congratulations on making it to the end. As promised, here's my gift to you. A special 20% discount on my mentorship program if you join before August 1st, 2025. Use code GIFT at checkout. Find the joining link in the video description. If you found value in this video, please like, subscribe, and comment below on topics you'd like me to cover next. Thanks for watching. See you next time, and happy trading.